my name is David Miller, and along with my colleague Carl Williamson, we are the managers of Nexus Global Solutions Portfolio and Nexus Global Dynamic, and I'm speaking to you in early December. Well, November was a challenging month. I'll explain why, but the bottom line is that both portfolios came through relatively unscathed. So to start with, the month was much like October, which was great for the portfolios, and it looked like all was set fair for the end of the year. Economic growth remains positive, company results are above expectations, and although we might see slightly higher interest rates, increases will be not by much. So all fine. And then I suppose it would be described as a known unknown came along, in that Omicron, a variant of COVID-19, appeared right in the last few days of the month, and investors took fright. They acted first and thought later. Markets fell quite sharply. What happened to the portfolios, I think, was instructive, both in the short term and for the longer term. And I'd like to divide my comments into two categories. So in the short term, the diversified solutions portfolio with over 50% in equities actually went up for the month. The investments in long-dated fixed interest stocks, government bonds, proved to be a good place to be as uncertainty increased, despite many comments about how unfashionable these investments are. Less surprisingly, index-linked gilts went up. And then in the alternative space, hedge funds, private equity, property, infrastructure, all made steady progress when equity markets were falling. And that's behind a positive return in a down month. And that is good to see at any time. But I think it's evidence of the way in which solutions is being constructed and the benefits. I'll come back to this. Dynamic, the all equity portfolio, had, as you might expect, a slightly tougher time. But here again, stock selection and getting the geography right paid off. Active management does work. And so having money in US equities and in particular in US technology companies really paid off. Nvidia and Advanced Micro Devices both produced returns in excess of 30% in a month. And we had other winners as well. So I think that both portfolios benefited from this approach to stock selection and the biases within the portfolio. And again, these factors matter at times of uncertainty. So that's about the short term, but I said I wanted to talk about the longer term as well. Longer term is what we're there to do. So that's not the same as being complacent, but it gives us the flexibility to take our time about making the right judgment. So as I said, act first, think later drove markets down at the end of November. But now as we move into December, what are the implications for the longer term? Well, there's still a lot of uncertainty about the Omicron variant, and I won't try to guess how this will go over the next few weeks. But I do think that investors are starting to conclude that the impact on the global economy, on the factors that have been driving markets over the last year and a half, haven't gone away, won't be stopped by this new variant. So that's where we are at the moment on that. It's work in progress by the scientists, and the rest of us are keeping a close eye on the infection rates. But already markets are starting to indicate that there are reasons to buy rather than reasons to sell. And that puts us in a good position with both portfolios. There do remain many opportunities, and I think that's what we need to keep very much in mind as we move through to the end of this year. The other lesson to take from the last few weeks is that portfolio construction really matters, particularly solutions with diversification into different asset classes, not always the most fashionable asset classes, but there nonetheless for moments of tension and for longer term opportunity. Stock selection matters. The emphasis on quality and liquidity will never go out of fashion. It's all about the detail. Fashions come and go in other areas like sectors or geographies, countries, but I think that the cornerstones of both solutions and dynamic won't. So that's where we are at the moment as we come into the last month of this extraordinary year of 2021. The risks remain. I wouldn't dismiss them, but I think that opportunities are there in abundance for those prepared to look. So for me, I think it's just an opportunity to wish all of you a happy Christmas and look forward to reporting to you again in the new year, which I hope will be a prosperous one for all of us. Thank you.